Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at RKLB, or Rocket Lab USA Inc. RKLB offers end-to-end mission services that provide access to space for civil, defense, and commercial markets. Here is the barchart.com technical opinion rating for RKLB. The bar chart opinion rating is a 72% buy, with the strongest short-term outlook on maintaining the current direction. Long-term indicators fully support continuation of the trend. According to Prime Trade Select rules, a stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that RKLB is well above the moving average line, so the monthly trend in RKLB is up. Now we're going to look at the daily chart. The stock is in a bull trend on a daily basis if the 50-period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line is above the green line, so the daily trend in RKLB is up. Next, we're going to look at the daily chart, or a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. RKLB is below the upper Keltner channel line, so RKLB is inside the buy zone. Since the trend is up, we want to buy a call. RKLB has plenty of option chains to choose from. We're going to use the July 18 chain. Right now, the July 18 options have 41 days to expiration. Here's part of the RKLB option chain for July 18. RKLB closed at 28.92 on Friday. That means on the call, any calls on the list from 22 to 28 are in the money. Let's take a look at the profit potential for purchasing the 29 strike call, which is the closest strike to the current price of the stock. The bid-ask spread for the 29 call is 262 to 285. We try to enter near the midpoint, so we'll use 275 as the buy price. Our call option calculator shows the profit potential for this call based on RKLB price changes at option expiration from flat to a 12.5% increase in price. We can see that if the RKLB stock price is flat at 9.82 at option expiration, at 29.82 at option expiration, the 29 call will lose 100% of its value. Ouch! This is an unacceptable risk. That kind of loss can wipe out a trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying this 26 strike call to see if it qualifies for the 1% rule. Here's the call option calculator picture for the 26 call. According to the 1% rule, we want to call to at least break even if the stock price is up 1%. The calculator picture shows that if the RKLB stock price is up 1%, the 26 call will lose 27.9% of its value. We want that to be break even or better, so the 26 call does not meet our requirements. Let's see if the 22 call will work. The bid-ask spread for the 22 call is 645 to 755. We tried to enter at the midpoint, so we use 7 even as the buy price. The 22 call works. If the RKLB stock price is up 1%, the 22 call will make a 3% or $21 profit. That's better than break even, so the 22 call is the one we'll buy. Call option purchase calculator also shows that if the RKLB stock price increases by 2.5%, the 22 call will make a 9.2% or $64 profit. If the RKLB stock price increases by 5%, the 22 call will make a 19.5% or $137 profit. If the RKLB stock price increases by 7.5%, the 22 call will make a 29.8% or $209 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the RKLB stock price does not make the expected move up and remains flat at expiration, the 22 call will only lose minus 1.1% or minus $8 compared to the minus 100% or minus $275 loss for the 29 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For the spread, we want to buy to open the RKLB July 18 22 strike call and sell to open the July 18 27 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 22 call for 7 and sell the 27 call for, $385. 7 even minus 385 equals 315. So the entry price or debit cost for the spread is $315. The call option spread analysis calculator picture shows that the spread will make a 58.7% or $185 profit if the RKLB stock price declines by 5%, remains flat, or increases in price when the options expire. If RKLB is down 7.5% at expiration, the trade will make 50.8% or $150. Creating the debit spread will allow us to collect a $385 cash credit to our brokerage account for the sale of the 27 call. As we said on the previous slide, this reduces the cost of entering the spread to $715. Here's a note regarding earnings reports. The next RKLB earnings report is scheduled for November 7? Looks like. Let's preview the trades one more time. The first trade was a call purchase. Said to buy to open the RKLB July 18 22 strike call for 7 even. We also reviewed the spread. The spread said to buy to open the RKLB July 18 22 strike call and sell to open the RKLB July 18 27 strike call at a debit of $315. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week.